This idea that gold and silver mining companies are brilliant at capital destruction, I think is just wrong. I think it comes from a lack of understanding of this problem of costs versus the gold price. So just to go into that a little bit, gold is money, silver is money, and they're pricing off false data in the bond market. You know, and I'll say for me that it's not just the work of John Williams at Shadow Stats. There are other things as well which indicate that inflation can be around probably average 9% over the last 20 years. I know that sounds completely shocking, but by the way, in truth, you know, a lot of the most interesting investors I meet would agree with me. They want to be up 10% net per year, otherwise they feel they're down. So that actually confirms that point. But if you accept that, then there's a huge input cost problem for these companies. And we see it consistently when you model them out properly. You can see it's there. And they're not able to hedge that away or avoid that problem. If costs are rising at 10 and gold is up 1, you know, it's not a management problem. Now, don't get me wrong, there are issues with corporate governance, remuneration, but I don't think they're any bigger than they are elsewhere in other sectors. I think that there's a narrative here which doesn't really bear out when you really dig into it. The issue is with the way inflation is reported, and thereby the way real interest rates price gold. And that's where both the problem has come for a very long time, but also where the enormous investment opportunity lies. Because if gold does start to break out in a major way, you're going to see massive margin expansion, operational gearing to the upside for these companies, and people can make fantastic returns on that basis.